welcome to part 2 of the Masterclass for MBZ Model. I'm going to be going over reversal opportunities with the MBZ model. And to understand that in depth, we must first understand liquidity, which is a very easy and basic concept. And then thereafter, I will show you exactly what type of liquidity to look out for and mark, and then how to observe different types of MBZs. And that's important because those are defined by strengths thereafter. So welcome back to the secondary part, and we're just going to get right into it. So to first understand liquidity, we must understand just swing point highs and lows. It's very easy to spot these. You don't really have to dive too deep into it. It's just when price moves away from a specific price point that becomes either a long-term higher low or an intermediate term higher low, right? And you don't really have to understand it too deep into it to look for opportunities with this reversal model. But the way I like to incorporate it with a stronger logic is to use OHLC highs and lows. So what do I mean by that? Well, if we go here to the 1 hour chart, we're going to be able to spot the highs and lows of each 1 hour candle. So here you can see on each 1 hour candle, those are the highs and lows that I like to observe for this given trading model, right? When it comes to types 1 through 3 of the MBZ model. And I'll get into exactly what those are here very soon. So again, I just like to look at a time frame alignment to make it more logical of an OHLC liquidity pool. So if I'm gonna trade on the 5 minute, I want to go to the 1 hour and just mark my highs and lows there. And that's a very easy thing to do because when you go to the 5 minute, you're going to be able to spot those key highs and lows from that OHLC range. So here we can see that at 11 o'clock, we have our high, and then we have our low as well. And so what we're looking for is, based off that, we're looking for an MBZ reaction. So I'm going to show you an example of what it should look like and how to spot it before and after it happens. So that's our 11 a.m. high and low. Again, I'm on the 5 minutes, so I'm going to use hourly highs and lows. And here we have the 12 p.m. high and the 12 p.m. low down here, okay? So I'm going to make these just a separate color. This is the 12 p.m., 11 a.m. And I want you to see the difference. So 12 a.m., excuse me, 12 p.m. 12 p.m., we spike into the high, right? At 2 p.m., we spike into it, we take the 12 p.m. high. And from there, you can see that there's a nice up close candle. So again, with the MBZ model, it's a 2 candle pattern. Nothing more to it, very simple. It's an entry technique, but we can refine this further with the higher time frame, which I will show you later in this video. But first, we want to understand what the actual pattern is so we can identify it. So here, it's important to understand that it's a 2 candle pattern and that the first candle, in this case, has to be an opposing candle. So what that means is because we have a resting high, it has to be a bullish candle. And then we need a bearish reversal from that high. So you can see here, there was a bearish candle into that low, which is good for the 11 a.m. low, but there was no bullish reaction. And so how do we spot that? Well, based off the first part of the masterclass of MBZ, we looked at type 4 MBZs, right? So what you would look for on that is fair value gap, opposing candle, and bearish reversal in this case. And how do we know it's a true bearish reversal? It closed past 50% of that bullish body from that fair value gap. If you're unaware of what this MBZ type is, which is type 4, and there's only 4 types, don't worry. The reason there's 3 types for liquidity is because we vary them by strength. That's all it is. But if you haven't learned this yet, I suggest watching part 1 of the masterclass and then coming back to this part. But here you can spot that there's an opposing candle, bearish reversal. That makes it a type 4 MBZ, right? So same thing here. We're looking for an opposing candle into that low, confirmed, so that's good. But as we can see, there's no close past the 50% mark. So because of that, there's no MBZ right there. And the key part is it has to happen on the next candle that took out the low. So you can see it took out the low, closed past it, and it would have technically been a type 3, which we'll get into very soon. But there was no reversal, so this does not count. Now let's see if it happens here. We have a bullish opposing candle. Let's watch the 50% mark of that body, and let's see if we get a close on it on the next candle. And sure enough, we do. So that becomes our MBZ pattern for a reversal. So here you're going to see the indicator marks it by itself automatically. But now we have to define what kind of MBZ is it. And so in this case, it's a type 2. Okay, what makes it a type 2? A type 2, you'll have exactly as we just talked about, an opposing candle, sweep, no close. There's no close. That's super important. There's no close. It just wicks. Okay, and then the bearish reversal in this case. So we need a opposing candle with a wick, a sweep, no close, and then a reversal. And that's all it is. That becomes a type 2. We're going to look at what a type 3 is and a type 1 as well. But from here, that's our entry pattern. Obviously, this is, again, bar replay. We know what happens, but now we can identify a type 2 MBZ. So let's see if we can identify a type 1. And sure enough, here it is. Same thing. We're still using hourly highs and lows. So here we have the 3 a.m. low. And now we're looking for a bullish reversal. So how can we identify a type 1? Type 2 is really strong. I love type 2 MBZs. A type 1, and by the way, this is your real turtle soup. This is how you identify real turtle soups. A type 1 is defined by simply the same exact thing. You have a bullish reversal in this case from the opposing candle. But the reason it makes it a type 1 is because the reversal confirmation candle, which is this one, takes out the liquidity swing and sweeps and also confirms the reversal. So here you can see the difference. Opposing candle stabs into it. Confirmation candle confirms the reversal. Here, the confirmation candle sweeps and takes the low and also confirms the reversal. It's basically a 2-in-1, all-in-one candle. It does all of that. It takes out the low, it confirms the reversal, making it a type 1. And so you're going to mark the zone from the close and mark it on the pivot low between the lowest point of the two candles. But because it's a type 1, you're going to always mark it just from this wick low. So the indicator marks it there. That's how you identify a type 1. So next, let's identify a type 3. So here we can see that again, we have a resting high, which is a 1-hour high. Nothing's changed there. And price has an opposing candle. But now we'll notice there's a little bit of a difference this time. Instead of a sweep, we can see that there's a partial close above the high. So that's good. We still have an opposing candle and we can still look for a reversal opportunity. But now we have to define it as a type 3 if it does happen. And we can anticipate this beforehand. Anytime you see a close past a level like this, there's still an opportunity for a reversal or an MBZ, entry and technique and model. But because there's a close past the level, it will make it a type 3 MBZ. So here we can confirm it, right? It closes past the 50% mark of that bullish candle body. So this becomes a type 3 because it has the body closure past it. Both candles don't have to, for example, the bearish candle in this case doesn't have to open past the level. As long as the reference candle, which is this one here, C1, candle 1, reference candle, as long as it closes past the level, that automatically makes it a type 3. And you can anticipate it beforehand. Type 3s are not as strong, but still worth observing. And so what happens is you'll see price oftentimes dig deep into it. And this is a perfect example. For type 2 MBZs or type 1, you really just want to see a clear expansion away from it. So a quick tap and move. But for type 3s, where there's a close past the level, oftentimes you'll see it dig deep into that MBZ zone and area, which is the close of the reference or the confirmation candle and the swing point high in this case. And the reason that happens is because, there was enough buyers to take it above this high and close it, and then sellers stepped in to take it back down. That's the logic behind it. But because price oftentimes retraces a little bit deeper into type 3 MBZs, my recommendation is to try to enter at the 50% area of that MBZ zone or the extreme point. And oftentimes you'll get really great turtle soups and reversal opportunities. So those are all the 3 types. So easy, so basic to understand, very simple. Now, keep in mind, this is just a pattern for trading, for reversals. And as you saw in the previous video, you had an opportunity for type 4 MBZs, which is a continuation. So in the next lesson, we're going to learn how to put that into a sequence that's so easy to understand so we can look to capture opportunities within the market. But before we conclude this lesson here, let's look at a couple of examples of how to incorporate a higher time frame liquidity MBZ with a lower time frame MBZ entry. And we can use any type at that point. So here we have a perfect example. Here I am on the 4-hour, and on the 4-hour, we're using, again, higher time frame liquidity. So in this case, we're using a daily high and low. So here we have a daily low from that previous price action. Price digs into that low. And before I say what it is, you can probably see the label regardless. It's best to understand what type of MBZ it is. And it's so simple. In this case, we have an opposing candle, sweeps the low, and we have a bullish reversal. Automatically, that's a type 2. Whenever there's a sweep of a higher low, it's either type 1 or type 2. And if you have both candles stabbing into it, like this, for example, or the opposing candle, the reference candle stabbing into it, automatically becomes a type 2. If you only see one candle and it's the confirmation candle like this, and the indicator lets you know like all of them, right? But if you have only one candle here, automatically it just becomes a type 1. So it's very simple and easy to understand. So here we have a higher time frame, 4-hour type 2 MBZ. So what we're going to do is go down to a lower time frame alignment, in this case the 15-minute, and try to spot entries based off that zone. So I'm just going to turn the fractal P03 on, and we can see that it's still marked here on the 4-hour chart, the type 2 MBZ, and we also have our zone to work with. And so now I will do is turn off the time filter, and we're going to be able to see if there was any opportunities within this area right here after the confirmation close. So if we want to check the times, I'm just going to turn this on real quick, show P03 times, and we're going to be able to see the times on these candles here. So we can see that the price or the candle opened up at 6 p.m. and closed at 22 o'clock. So that tells me after this time here, we had price pretty much begin a new 4-hour candle, which is going to be this one right here. Okay, very simple. Now what that means is after that candle confirmation close, which is right here on this vertical line, we could start to look for opportunities. And so because I'm using the 15-minute with the 4-hour alignment, all I have to do now at that point is either look for a reversal or a continuation. So because the reversal already happened down here, you can see that price is already ramping up. We have a 4-hour type 2 MBZ, we can then look for a continuation, and that's all we have to do at that point. So we then, before we start looking for just, again, a pattern entry, it's great. We're adding the confluence. We have a higher time frame MBZ. We're looking for a lower time frame alignment with it. But let's make this a little bit better of an opportunity. Let's mark potential strong targets. We have resting highs. We have relative equal highs right here. Oh, that's great. Relative equal highs is an amazing target to have. And then we can also check to see, again, as we did in the previous video, if we have any untapped gaps. So here we have a bearish 4-hour gap. It's untapped. We can check the 1 hour as well and see if there's any untapped gaps there as well. So it's always great to, before you start just looking for entries, is marking the higher time frame confluence, but also marking key potential targets and levels, right? And so here we have relative equal highs. Now that we have that, we can then look for an opportunity. And so what happens? Within this zone, we want to follow the alignment. We want to look for bullish opportunities. And you'll see here, price retraces into a bullish gap, opposing candle, and a bullish reversal past the midpoint of that body. This then becomes a type 4 continuation, as mentioned in the previous lesson. And so here we can look for an entry to those relative equal highs to make this a worthwhile trade. Because if we target this pivot high, it's a decent RR, but if we target those relative equal highs, it becomes a 2 RR, as we can see. And so this is a picturesque, just perfect opportunity. The market's not always going to be like this, but when you have the higher time frame confluence, the narrative, the target, the entry, following that alignment, it makes it a lot easier to make a logical sequence and to look for opportunities. Let's say, you even missed that opportunity. The market's going to give you more opportunities later on as long as you're following that sequence. So instead of those relative equal highs, you can target this resting high up here. And again, you have a type 4 MBZ that still is residing within that bullish MBZ zone. So here we can see that when it comes to the liquidity MBZ from that PO3, this type 4 MBZ still happens within it. So that's still a pretty good opportunity. So next, in the next lesson, we're going to be looking at the sequence, continuations, and how to incorporate inversion fair value gaps with all of this combined to understand it so in depth that you're really going to have no questions at that point. You're going to understand all of it. And then from there, we're just going to look at a reversal to continuation sequence. So I hope this brought insight into what a liquidity MBZ is and how to identify them and how to incorporate it with the higher time frame.